Is this a mortgage from the original purchase?
The mortgage from the original purchase, which I would assume would be through the military.
Well, this is what I'm getting at. Did the military, was the original purchase of the home, did it have a mortgage on it then, or is this a refinance later?
Sir, it was a refinance later. The military okayed it.
Yeah, I think you're going to have to send Randy, listen, you're going to have to send Randy an email or something, because this is just, Shannon, I mean, we've never heard of this, so we're not exactly sure what you're getting into. Sorry we can't answer your question properly. Let's go ahead and talk to Kim in Indiana. Go ahead.
Hello?
Yes, go ahead.
I have a question for Randy. I've got my property, which I do hold the deed for it. It's paid for. For example, if my house would go into foreclosure, could they still come and take my house although my property's paid for?
How do they have a lien against it?
I mean, no, I've got the deed for my property, is what I'm saying. It's paid for. But I got a mortgage on my house.
Then, yes, based on the mortgage gives them a claim against the title. While you hold the title, and the title is in your name, the mortgage gives the mortgagor, the mortgagee, a claim against the title in the event that you don't meet the requirements of the note, the security instrument.
But are you talking about the warranty deed on the entire property or any conventions on that? I mean, is there a separate piece of property? Have you subdivided it? Or are you talking about just the house?
I'm just talking about the property that sits on the house.
Yeah, absolutely they can foreclose.
They still can foreclose. Okay, yes. That's all I need to know.
All right, thank you.
Yeah, with that said, if they've done this within the last 10 years, the note, if you fight them, they won't have authority to foreclose, almost certainly.
Because they clouded the entire chain of title since then.
Exactly. You can fight them.
All right, let's go ahead. This is different if you've got a house bought before 11 years ago on average.
Yes.
They can probably take it because it was done properly.
Unless, if they securitize the note, then they'll have a problem.
Oh, so stuff that's even older than 11 years, if they've sold it since.
Yeah, they started about 95.
Oh, okay. All right, let's go ahead and talk to Bill in Florida, then Ronnie, Ken, and others. Bill dropped. Let's go to Ken in Indiana. Ken in Indiana, you're on the air.
Hello.
Yes, go ahead.
Can you explain again, Randy, the difference between the truth in lending statement and the HUD-1 and how to figure that out, and what are the fees that the lender can't charge that you're saying are illegal?
Okay, truth in lending statement. The truth in lending statement, it's one page, and it will, right across the middle, it'll have 4 boxes. It'll show the interest rate, the total amount of interest you'll pay, the total amount of principal, and the principal and interest combined. And then under that will be a section that'll show what your payments will be. Now, this is required to be within 1/8% of what the final amount is. You're supposed to get a truth in lending statement after you file the loan application, and then a final truth in lending statement within 3 days of closing.
But you normally see it right there in the signing.
Okay. The HUD-1 settlement statement, that's the 2-page legal size document with lines all over it. It goes from line 100 to line 1400. The second page starts at line 700. That lists all the fees you pay at closing. Now, you look at those fees. There's a loan origination fee. That's a fee that's paid to a vendor. That's paid to the person as a commission for bringing them the note. That can be no more than 1% of the note. If you look down below it, you sometimes see a yield spread premium. That's exactly the same thing. I've seen 2 yield spread premiums at a loan origination fee.
So they'll triple charge under different names, and is that federal law that they're not allowed to do that?
That's federal law, the Truth in Lending, the Real Estate Settlement Procedures Act and Truth in Lending Act specifically limit what the lender can charge the borrower.
But then how do they get away with doing it?
People don't know. So
they have you sign that you know about the truth in lending, but you waive it.
Yep. No, they don't even do that. The lenders call these junk fees. They just stuff them in there. And what we've done is pulled a dirty, stinking, rotten lawyer trick on them. We claim that they added these fees in there so that they could, their extra fees, it was intended that all of these costs be absorbed in the interest that they charge you, part of the finance charge. But they added them to the head of the note. They charge you interest on them for 30 years, and we maintain they take those amounts and they slip them under the table to the loan originator.
Because now there's interest on fees that have already been jacked up.
Yes, and that...
They don't even give you the opportunity to pay a separate check flat off for that.
On a 6% note, if they add $1,000 to the principal, you'll pay $5,900 over the life of the note.
And on average, with a $300,000 house, you're saying it's over 40.
Yes.
All right, I hope that answers your question. Appreciate the call. Up next here, John, I got my list confused. Mike in Louisiana, you're on the air with Randy Kelton and Alex Jones. Go ahead.
Hey, Alex, long-time listener. Really appreciate the show. I've got a question for your guest. I'm in the mortgage business, and he's throwing out some of the terms, but as far as the limitation on a 1% origination being the maximum amount you can charge on a loan, that's only for FHA loans. For conventional loans, for what used to be non-conforming loans, subprime, Alt-A, you could charge more than 1%, but the FHA limits you to 1%, and there's other fees that are non-allowable fees. Lenders can choose to itemize their fees based on the services that they provide. If you have a processor that you're outsourcing, you can choose to pay her separately, and things like that. The reference to the yield spread premium in the form of a payment outside of closing when the loan is sold. If I used to be a broker, a mortgage broker, who's been the whipping boy for this whole industry for the last 3 years, and what happened is we would originate the loan and get paid for that, and also based on the interest rate that we were able to sell in the free market at, let's say, the going rate was 5, and we sold a 5% rate, that might be par, meaning there was no yield spread premium, and it has to be disclosed on the good faith estimate, and it also has to be disclosed on the HUD-1 settlement statement in a certain block, and he referenced those. However, if you sold the loan at 5.25, that extra quarter point in rate would mean that you might get a yield spread premium of, let's say, 1%. Now, I know we don't want to get too obtuse on a radio show, but Section 32 is the law that regulates how much an originator can make, and it's more than 1%. But
well, here's a simple question. I want Randy to be able to comment on this. We're skipping this final break. It's real simple. Before 99 or so, they would not go out and induce people, the brokers and others, to exaggerate how much money they make or whatever. And the loan officers, and I'm just boiling all this down to simplistic terms, above it wouldn't certify it. But something changed, and we've all heard about that. And I understand the whipping boys been the low-level people. We're talking about the big mega banks that engineered all this, so I'm not saying you're the devil. You were going through your industry and what was standard operating procedure, just like giving somebody chemotherapy is, because the American Medical Association says so. But I mean specifically, things did change, and the whole thing's grinding to a halt. I mean, bottom line, what are you saying to Randy, that he's wrong?
The charge, I guess that gets them into court by making the charge on the fraud, and then you can pull up, as you alluded to earlier, you can pull up the show me the note argument, but the pulling up the fraud thing with the interest rate on the truth in lending is an APR. It's an annual percentage rate. It's the cost of your loan in the form of an interest rate over the full term of the loan, because the federal government, in their wisdom, wanted to make it easy for clients or for customers to compare.
Okay, Randy, comment on this, because it's getting all academic.
The issue we bring, the note is very clear. You sign this contract and you say, I agree to pay this amount of principal at this interest. And then the lender comes along with this other document that has a different principal on it and a different interest. And when I run the two of them, the one with the different principal and interest doesn't come up with the same cost to me as what I agreed to.
So you're saying the fraud is people are shown one bill and then on the final day another bill.
And that's because you could go to Bank 1 and get 5%, and they charge you $2,000 for a 5% loan for 30 years, and Bank number 2 is going to charge you $2,500 for it. And so the truth in lending, the whole point of that was to help you determine what that Bank 2 is charging you more.
Well,
and then they quantify it in the form of an interest rate.
I looked at the truth in lending statement. I'm not sure what you're quantifying. I know I sign a note, and it says I agree to pay X amount of principal at X amount of interest. How does it get that? How does it get that the truth in lending statement has a payment amount on it? That if I pay that payment, I will pay thousands and thousands more than what I agreed to.
That's listed on the truth in lending matches the note rate.
Absolutely. So, it does about 25% of the time.
Well, if the PMI carries over to that, so you might be mistakenly looking at a truth in lending that has a PI plus a PMI charge on there, and it not computing because the people didn't put down 20%.
Hey, why don't you? I bet you'd like to talk to Mike off air.
Yes, I would.
So send him an email there at mortgagecrimes.com, or Randy, what's an email for you?
That would be a great one.
All right, just go to that site and it's got it right there. Mike, very interesting. I'll tell you, I study this stuff all the time and I get confused by it. Let's go ahead and talk to Dan in Texas. Dan, you're on the air.
Yeah.
Yes, sir.
This is Dan in Texas. I'm having basically the same problem here. It is quite academic. And I'm looking at your website, and I'm trying to see, I don't actually know what an 801 is or a HUD-1 settlement. I don't know what these things look like. And I'm wondering if you have a complete example, something that we can look at front to back and learn how to do this
Sure, no.
thing.
He's just giving you basic things for you to go dig it out yourself and look at it.
Yeah, you can. If you look in your loan package, the HUD-1 is really easy to locate. It's the only one it has lines all down the document. We should. I haven't looked at the website today, but we should have a HUD-1 interactive on the website that you can open up and fill in the amount.
Yeah, but let's be clear. We had a lawyer on earlier from ICE Legal who's in the Wall Street Journal winning these cases just to hear what he had to say, just like we're hearing from Randy. Randy's involved in a whole bunch of stuff as a pro se litigant. He's not there to hold everybody's hand through this. We're just talking about general issues that are going on, and Randy's now trying to develop and codify all this. This is all a work in progress. We don't have all the answers. I certainly don't. I'm just here investigating all this from different perspectives.
Yeah, and this issue of the truth in lending statement, I've had a number of people that I've talked to about the truth in lending statement, and it always comes up different. I never can get anything clear and definitive that tells me why Steve was required to pay $720 a month on the truth in lending when the note he agreed to came up to $693. Couldn't figure that one out.
All right, I get it. I'll have to look at your website.
All right, listen,
I
got to jump. Thank you. Interesting points, Dan. Right there, that's where you've got a contract. They're supposed to give you the money. You take that, you walk down, you bring it to the police. They don't do something, you file criminal charges.
Precisely. I'd go straight to a grand jury. That's primarily my strategy.
And by the way, we get hundreds of calls like this and emails every couple days, and then we see it in the news where paid-for houses are being taken, pensions, stocks. It's just the thieving is already. In fact, I've got a Before It's News article, insider stock sell-off, 3,177 to 1 sell to buy ratio. All the big elites are dumping their stocks right now.
I'm surprised it's taken them so long. I told my brother a year and a half ago, he lost almost everything.
Well, we're out of time, Randy. It's mortgagecrimes.com. People want to get in contact with you. It's a work in progress. I'll be back tomorrow live, 11 a.m. to 2 p.m. Central Standard Time. We did an hour of overdrive today. Great job to the crew. Remember, if you believe in the work we're doing, we need your support. Infowars.com, the online video bookstore. A lot of key info coming up straight ahead with the retransmission. Spread the word about the broadcast. We appreciate you all. Again, see you back tomorrow, God willing. Take care.